And in business news, the federal government of Nigeria, through its debt management office, has announced plans to raise minimum of 300 billion naira through its bond offer scheduled for July 2024. The first bond offering is a reopening of the 19.3% FGN April 2029 bond with a target raise of 100 billion naira. While the second bond is 18.5% FGN February 2031, also targeted 100 billion naira. For the third bond offering 19.89%, FGN May 2023 bond with the highest interest rate. This bond also aims to raise 100 billion naira, bringing the total amount offered to 300 billion naira. The bond offer will be conducted by auction, featuring 3 different reopenings, each with distinct maturity dates and interest rates, providing a variety of options for potential investors. The Secretary to the Government of the Federation has tasked stakeholders in the maritime sector to collaborate to reduce corruption in the sector. Speaking at the 17th edition of the International Judges Conference, put together by the Shippers Council of Nigeria for judges, he said if corruption is not tackled, it will impact the cost of doing business, limit economic growth, and social well-being of the people. Helen Osamide Akins reports.
Since taking office in 2023, President Bola Tinubu has emphasized diversifying Nigeria's economy, which has long been dependent on revenue derived from the sales of crude oil. This administration recognized the essential role and economic significance of the maritime subsector in diversifying, revamping, and strengthening the economy, which gave rise to the establishment of the Ministry of Maritime and Blue Economy. Today, the Council is hosting the 17th edition of the International Maritime Seminar for Judges, which draws stakeholders and judges from across Nigeria and other African countries. The federal government wants participants to support government efforts aimed at reducing corruption in the maritime sector.
Corruption is a significant impediment to development and efficiency in any society. Call on all stakeholders to work together harmoniously to eradicate corruption, corrupt practices.
I encourage judges at this forum to continue to apprise themselves with the recent innovation of the suppression of privacy and other maritime offenses. The heart of this is the Act of 2019, and as it establishes a legal framework for the prosecution of privacy and protection of maritime infrastructure.
The organizers commend ongoing efforts to repeal the Shippers Council's Act.
We have been working assiduously to strengthen the institutional and legal frameworks of the agencies under the ministry. In this regard, the ministry has recently thrown its weight behind the repeal of the Nigerian Shippers Council Act.
There are a lot of innovations coming up in the sector, so many changes, even in terms of the conventions that we have adopted over the years. There are some basic requirements that countries should adopt in their laws. We need to bring this law to speed and bring it to the modern realities of the maritime sector.
The seminar also aims to harmonize business laws across Africa, fostering trade and investment under the Africa Continental Free Trade Agreements. The seminar, among other things, will serve as a vital platform for exchanging knowledge, sharing best practices, and addressing the evolving legal issues that impact the maritime sector. Helen Osamide Kings, TVC News.
According to a report by Statista, the world public cloud computing market is expected to reach an estimated $675 billion in 2024. That's this year. In recent years, cloud computing has seen exponential growth, with more and more businesses migrating their data and applications to the cloud. Earlier today on our flagship business program, Business Nigeria, a cloud engineer, Mr. Chukwuka Onwobolo, highlighted the advantages of adopting cloud computing into various business dealings.
One of the reasons why business can migrate to the cloud is to drive innovation and also drive growth and also cost effectiveness. By moving to the cloud, businesses can actually avoid the heavy cost of managing their resources, paying for buildings, maintaining physical infrastructures like servers, buying up licenses that they might not use. But if these businesses are in the cloud, we have what we call pay-as-you-go subscriptions, whereby They can pay for actually what they use, and what they don't use, they don't need to pay for things like that. And they can always scale up. For example, if they have few resources in the next 5 to 10 years, they want to scale up, they want to add more resources, they want to add more staffs, they want to add more infrastructures, they can also scale up. And also for the cost effectiveness, cloud computing is actually cheaper than having infrastructures, because it reduces the IT expenses, the need for in-house software licenses, the need for more IT staffs, allows the business to also allocate their resources towards other critical areas. For example, if you have some budgets which you're going to spend on your staffs, or you want to spend those budgets on your infrastructures, buying a physical server that might cost you millions, you can actually use that money to actually invest in other parts of your business.
The World Bank has appointed Dr. Nami Diop as the new country director for Nigeria. The bank in a statement said Mr. Diop assumed his new position in Abuja after succeeding Mr. Shabru Chowdhury, who completed his term in the same capacity. Mr. Diop would lead the World Bank's team in Nigeria and deepen policy dialogue in partnership with the government and key stakeholders, and oversee the delivery and implementation of lending and non-lending support to Nigeria. Before his appointment, Mr. Diop served as the World Bank country director for Brunei, Malaysia, Philippines, and Thailand. The new country director for Nigeria expresses his excitement to be leading the World Bank's program in Nigeria, especially at this critical time. Nigeria has a significant opportunity to make progress towards improving its economy and delivering development outcome for citizens. The stock market has maintained its negative posture, responding to sales pressure by many investors, Effiong reports.
Market bears to control of the trading floor of the Nigerian exchange, crashing securities prices across trade sectors. With sales pressure taking energy from inflation in the economy, the need to hold money for expenditure increases each trading day. The index of the market, which is our prime indicator of price movements, dropped by 0.20% to emphasize losses on investments. GT Holdings was the biggest price loser at more than 4% on the back of sales pressure by investors. Other banking stocks that suffered losses included UBA, First Bank Holdings, Access Holdings, and Zenith Bank. Manufacturing company Cadbury was able to grab reasonable gain calculated at nearly 10% on the back of renewed interest on the stock. Dangote Sugar, Wapco Lafarge, FCMB, and Unilever were gainers with reasonable margins. 304 million units of securities worth 4.91 billion naira were traded across market sectors. Some analysts say they expect further price cuts in some stocks. Effiong TVC News, Lagos.
Finally, crude oil prices were little changed after a hurricane that hit the key U.S. oil-producing hubs in Texas, which caused less damage than markets had expected. U.S. West Texas Intermediate crude is selling at $81.78, down 0.67%. Brent is down 0.58%, selling at $85.25. Bonnie Light is down 0.72%, still at $86 per barrel. For the OPEC basket, it's up 1.25%, still at $88.15.